Hey everyone, welcome back for another deep dive.
Glad to be here.
Today we're going to take a look at venture capital,
Okay.
but we're going to be focusing in on a specific type of fund. Have you heard of opportunity funds?
Yes. Yes, I have.
Okay, so we've talked, around this idea before, but for our listeners, opportunity funds are basically where VCs double down on their most promising startups,
Right.
the ones that they think are about to really take off.
Mm.
The thing is, 2024 has been kind of a weird year.
It has.
And this once super popular strategy, it's really getting a makeover. Some are saying it's completely being abandoned.
Yeah, you're right. And I think it mirrors a lot of the changes that are happening across the startup landscape more broadly.
So maybe we should rewind a little bit
Okay.
and talk about how these funds have traditionally operated.
Yeah, so traditionally opportunity funds, they're set up to provide more capital to late-stage companies that are showing massive growth potential.
Right.
Often companies that are on the verge of going public.
Okay, so they're about to IPO.
Yeah.
These funds are coming in, and they're fueling that final push.
Exactly.
And I'm guessing that makes them pretty attractive to, the investors, the LPs.
Absolutely. The LPs, the limited partners, they're drawn to these funds because the potential for returns is massive.
Yeah, it's huge. I mean, you back a company right before it explodes onto the public market.
Yeah, that's the goal.
That sounds like a recipe for some serious profits.
It can be.
But 2024 has kind of thrown a wrench into the works.
It has. It's interesting how things have changed just in the last couple of years.
Yeah, so one of the big things that we've seen is this pretty dramatic decrease in the number of new opportunity funds being launched.
Yes.
Like, we have some numbers on this. In 2021, $12.1 billion was raised for opportunity funds. This year, only $3.4 billion.
Huge difference.
Huge difference, right? What's driving that?
Well, I think there are a couple of main factors. One, I would say, is the soaring valuations we've seen for startups in recent years.
Okay.
You have a company that is, valued at, say, $1 billion, and it needs more funding. A VC might need to see that valuation double or even triple
Right.
to see a good return on their investment. But with these sky-high starting prices, the potential for that kind of growth diminishes.
You're starting so high already.
Yeah, exactly.
Hard to do, like 10x.
Right, the upside is much smaller.
Yeah, exactly. So
Yeah.
it's almost like buying a stock that's already, priced incredibly high.
Yeah, it's a similar concept. And I think the second big factor is this slowdown in IPOs. Companies are staying private longer these days, which reduces the urgency for those late-stage investments.
Right, those late-stage investments that the opportunity funds would traditionally target.
Exactly, yeah.
Okay, that makes sense.
Yeah.
And, we have this pretty interesting story of CRV. This is a major VC firm.
Mm-hmm.
And they actually made the decision recently to return over half of their $500 million opportunity fund to investors.
Yeah, that was a bold move.
Right.
Very interesting. But their reasoning is, I think, is telling.
Okay.
So they, CRV basically said, hey, you know what? A lot of the companies in our portfolio, they already have tons of cash from previous rounds.
Right.
They don't need more investment right now. Plus, the market is so flooded with capital that prices are high and returns are diminished.
So they're kind of saying, hey, we'd rather return your money, than risk diminishing your returns
Right.
by chasing these overpriced deals.
Right.
So is CRV an outlier,
Right.
or is this a sign of things to come?
That's a great question. I think, what's really interesting is that while some firms are pulling back like CRV, others are busy redefining what opportunity even means in this new environment.
Okay, so tell me more about that. Who's doing that, and what are they focusing on?
Well, so take Lightseed Venture Partners, for example. They're reportedly trying to raise billions for funds that will invest in things like secondary equity stakes and positions in other VC funds.
So they're not actually funding those late-stage startups.
Had a different approach.
They're going for, like, pieces of other things.
They're looking at different ways to get a piece of the action.
Okay.
So, for example, a secondary equity stake means that they're buying shares of a company from an existing investor.
Okay.
Could be an early employee, it could be another VC firm. And when they invest in another VC fund, they're basically betting on that fund manager's ability to pick winners.
Clear.
So it's a less direct but potentially more diversified approach.
So it's spreading the risk a little bit.
Exactly. Yeah, they're tapping into different parts of the market.
Okay.
And Lightspeed is also considering taking controlling stakes in companies that are actually struggling,
Oh,
with
wow.
the goal of turning them around.
So this is like the fixer-upper shows.
Yeah,
But for business.
I like that analogy.
Okay, so we've got that. But there's one sector that seems to be defying all of these trends.
Yes.
Artificial intelligence.
Right.
Generative AI, specifically.
The AI gold rush.
So everyone wants in on this.
It feels that way, right?
Yeah.
But there's a reason. Developing large language models,
Right.
which are at the heart of generative AI, requires huge amounts of capital.
Massive amounts of capital.
And LPs are practically throwing money at anything AI related.
Okay.
So this makes the sector very, very attractive to VCs who are looking to deploy large sums of capital.
So everybody wants a piece of that pie.
Right.
Are there, like, any specific examples of this happening right now?
Yeah, absolutely. So Kleiner Perkins, a major player in tech investing, they recently raised $1.2 billion for an AI-focused opportunity fund.
Wow. They are betting big on this.
They are.
Okay, so we've talked a lot about how the VCs are adapting.
Mm.
But what about the folks who are actually providing the money for these funds? The limited partners, the LPs. How are they reacting to all of this?
It's a good question. I think we can almost think of it as a shift in the balance of power.
Oh, interesting.
You know, LPs are becoming a lot more discerning about where they put their money. They're pushing back against funds that they see as less promising, and they're demanding more transparency and accountability from the VCs they work with.
So it's not just a one-way street anymore.
No.
The LPs are they're having a say now.
They are.
What?
You know, Steve Brotman of Alpha Partners, a very experienced investor, he shared a really interesting perspective on this.
Okay.
He pointed out that in the past, some LPs felt pressured to invest in opportunity funds just to secure allocations in those high-performing early-stage funds.
Oh, so it's almost like if they didn't do that, they wouldn't get a seat at the table.
It was kind of like a you scratch my back, I'll scratch yours type of a situation.
Got it.
But now the game is changing. LPs are doing their homework.
Right.
They're analyzing the market, and they're making more strategic decisions about where to place their bets.
It's interesting how the power dynamics are shifting here.
It is.
It seems like it's a much more balanced playing field.
Yeah.
Wow, this is a lot to think about.
Bet.
I'm starting to see how these changes are impacting, the entire VC landscape.
Yeah.
But before we jump into kind of the final takeaways, are there any other perspectives or any other trends that we need to cover?
Yes. There's one more crucial point I think we need to address.
Okay.
And that is the potential ripple effects of all this on the wider startup ecosystem.
Okay.
You know, the shift away from traditional opportunity funds,
Okay.
it raises some really important questions about the long-term health of the entire startup ecosystem.
So what are some of the potential downsides here? If we're seeing this pullback from these big late-stage investments.
Well, I think on the one hand, you could argue that this is a much-needed correction.
Right.
You know, things were getting a little bit out of control, valuations reaching unsustainable levels.
It's like a bubble that needed to burst.
Yeah, exactly. Back to reality. This shift could actually lead to a more sustainable and balanced startup ecosystem
Right.
where companies are valued more realistically
Okay.
based on their, actual performance and potential.
Makes sense.
So that could actually be a good thing for the long-term stability of the market.
But what about, like, the flip side?
Right.
Are there companies that might struggle because of this?
Yeah, I think that's the big concern, right? There's a risk that promising companies, even those with solid fundamentals, might find it harder to secure the capital they need to scale.
Especially if they're not operating in, like, AI, right?
Exactly.
One of these hot sectors.
If access to capital becomes more restricted, it could stifle innovation,
Yeah.
slow down the growth of new industries. We could see fewer groundbreaking companies emerge if they can't get the funding they need.
So it's kind of a double-edged sword.
Yeah.
We might end up with a more rational market,
Right.
but maybe at the cost of some promising companies getting left behind.
You hit the nail on the head.
Okay.
It's a complex situation with no easy answers. And it's important to remember this is just the beginning.
Right.
We're only starting to see how these changes will actually play out in the long run.
Yeah, it's going to be interesting to see, how VCs and LPs really adapt to this new reality.
Yeah.
And I think it's also crucial to remember that every decision that's made in in the world of venture capital, it has these ripple effects
Hmm.
that extend far beyond just financial markets.
Absolutely. These
It-
startups, they aren't just building businesses. They're
Mhm.
creating jobs. They're developing new technologies. They're shaping the future.
Right.
So their success or failure,
It all has an impact.
direct impact on the economy and on our lives.
Yeah, no, I totally agree with you there.
Yeah.
This has been a really insightful deep dive.
Yeah.
I want to kind of, before we wrap things up, I want to go back to something you mentioned earlier about the changing power dynamics between the VCs and their investors, the LPs.
Right.
So we're seeing this balance of power really shifting.
Yeah, it's definitely shifting.
And I'm curious, is this trend towards greater LP influence a good thing or a bad thing?
Well, I think, like most things, it has the potential to be both, right?
Right.
On the positive side, this increased LP scrutiny,
No.
it can lead to greater accountability and more responsible investment decisions.
Got it.
It can force VCs to really focus on generating solid returns
Okay.
rather than chasing hype or making risky bets just to keep up with the competition.
So in theory, this could actually lead to a more stable and sustainable VC industry,
Exactly.
which would ultimately benefit everybody.
Right.
Okay.
But there is also a potential downside.
Mhm.
If LPs become overly risk-averse, it could make it harder for VCs to back those really bold, groundbreaking ideas.
Right.
Because those early-stage companies,
Yeah.
the ones with the potential to disrupt entire industries, they often come with a lot of uncertainty.
It's a lot of risk.
Yeah, it's that classic dilemma, balancing the risk and the reward.
Exactly.
Right.
Finding that right balance between accountability and innovation,
Right.
that's going to be crucial for the long-term health of the VC ecosystem.
It's a delicate dance.
It is a delicate dance,
Mhm.
and all of this is happening against a backdrop of, rapidly changing technology and a global economy that's facing a lot of uncertainty.
Absolutely. We are living in some pretty unprecedented times,
Well,
and the world of venture capital,
Yeah.
it's right at the forefront of these changes.
It is. So to recap, the once dominant strategy of opportunity funds, it's facing some serious challenges.
Okay.
Our market conditions have changed, investor sentiment has shifted, and the definition of opportunity itself is being rewritten.
And while some VCs are pulling back, others are adapting, exploring new investment avenues, seeking out opportunities in emerging sectors like AI.
But the big question remains, will this shift lead to a more sustainable and balanced startup ecosystem, or will it stifle innovation by limiting access to capital?
That is the million-dollar question. Only time will tell, but one thing is for sure. The VC landscape is undergoing a profound transformation,
Yeah.
and we're really just beginning to see how it will all play out.
As we wrap up this part of our deep dive, I keep thinking about the broader implications of everything we've talked about.
Yeah, me too.
This goes way beyond just the world of venture capital.
It really does. There's a lot here, and it raises some pretty fundamental questions about the future of, technology, innovation, entrepreneurship.
We've explored the changing dynamics between VCs and LPs, the challenges and opportunities presented by this shift away from traditional opportunity funds, the emergence of new investment trends like AI. But there's one more crucial piece of the puzzle that we haven't really touched on yet.
Okay, I'm all ears. What is it?
It's the role of government policy in all of this.
How governments choose to act can really influence the future of the startup ecosystem. Think about, regulations, tax incentives, funding programs. All of those things can have a massive impact on how easy or difficult it is for new businesses to get started and to grow.
Yeah, you're right. It's like, government support can really be like rocket fuel for innovation, but we've also seen how too much regulation can stifle it
Absolutely.
and really kind of slow things down.
Yeah, it's a delicate balance for sure.
So as we kind of think about moving forward,
Yeah.
it's crucial to think about how government policies can either help or hurt, the growth of this whole startup ecosystem.
It's something we all need to be aware of and engaged in for sure.
Because at the end of the day, a thriving startup ecosystem, this isn't just about making money.
No.
It's about creating a society that is more dynamic,
Right.
that is more innovative, that is more prosperous for everyone.
It's about giving those with great ideas the tools and support that they need to make them a reality
Yeah.
and to solve some of the world's biggest problems.
This has been A really eye-opening deep dive.
It has.
Before we sign off, I want to leave our listeners with one final thought to ponder.
Okay.
We've talked about how the venture capital world is changing and how that impacts startups, but it all connects to these bigger questions about the kind of future that we want to build.
As we kind of navigate this shifting landscape in venture capital, what role should the government play? How can we ensure that the startup ecosystem stays strong and keeps driving progress for years to come?
Yeah, that's the question we all need to be thinking about.
Hmm.
And hopefully this deep dive has given you some new insights and some perspective to bring to that conversation.
Absolutely. It's been a pleasure exploring all of this with you and our listeners today.
Yeah.
Remember, the story is still being written.
Right.
Stay curious, keep asking questions, and be a part of shaping the future.
And who knows, maybe one of you listening right now will be the next big disruptor,
Yeah.
launching a company that really changes the game. We can't wait to see what the future holds. Until next time, keep learning, exploring, and diving deep.
See you on our next deep dive.